All right, here we go. So, hey, what's up, everybody? Welcome to December 10th MakerDAO community call. We do these calls every Tuesday. We've been doing them for a couple of years, and we use them to pretty much get everybody informed about what's been going on in the space. We usually go through just an entire agenda of stuff that's been going on in MakerDAO for the last week, everything from governance to like partnerships and integrations, highlights from the community, interesting forum posts, threads, everything. And so I spend a couple hours a week curating all the stuff that's going on, and hopefully uh, using this call as just a way to communicate it to you guys so you don't have to do that work. And every now and then we have a guest come on the call. We get to see kind of the latest things that are being worked on in the space. We get to uh, ask questions real time to the people that are building these things. And so today, anytime we have a guest, we actually start with the guest. So if you're here for the agenda for what's been going on for the week, that's going to be in the latter half of the call today. But today we have a special guest, Mr. Patrick Manfra. He's the co-founder of an app called Outlet Finance. And Outlet is it's a pretty cool app because it's trying it to enter. Well, it is entering the space from a different perspective than a lot of traditional DeFi dApps, right? But he's entering the space from a little bit of a different perspective, and so I'm gonna hand it off to him, and I'll let him further introduce himself and launch into it. I think we're going to be going into a bit of a demo and some Q&A. So Pat, it's all you.
Cool. Awesome, man. Thank you so much, David, for having me on the call. Yeah, so just a quick synopsis of Outlet and what we do. Outlet is a high yield savings account alternative for risk averse savers. And we provide people with a simple, familiar, and insured mobile app. And we earn our high yield through underlying DeFi protocols. So that's basically the synopsis of Outlet and what we do. The mobile app itself, I guess I could start demoing that actually. I think that would be pretty cool. So here, I'm just gonna share my entire screen real quick. Hang on 1 second. But basically, like a whole thought process behind Outlet was we're a mobile app. Yes, we're a DeFi app, but we're not for really crypto people, to be honest with you. We want to target mainstream people and provide them with like different ways to save and earn money. Right now, like a lot of our, can you guys see my screen?
Yeah, we could see it.
Okay, perfect, cool. You can still see it?
Yes.
Awesome, man. All right, cool. So 1 second.
So hold on. So real quick, I'm gonna just qualify the call. So the format is that we're gonna do a demo, and throughout the demo, feel free to interrupt either Pat or I or whoever's talking with any questions you might have, or put them in the chat. And if you personally don't have a mic, I'm happy to read off your questions for you and engage with Pat about anything you guys are curious about. And so yeah.
Definitely. Yeah. So just kind of walking through the app. This is the screen that you see once you've gone through our KYC process. Right now, this is a developer mode app because I have a cool feature I want to share that actually isn't in our live version of the app yet. That I think a lot of people, especially in the maker community, would really get behind. So kind of just walking through the app here, you see it's really simple, right? Like I wasn't kidding. So right now you basically have a couple options you can do with your money, right? So throughout the KYC process, typical KYC, right? And then you go through Played and you hook up your real bank account to the app. So the way it works is when you click deposit, this would then draw money from my real bank account. Mm-hmm. So when if I were to want to transfer this money over, I would just click submit, and then it would start an ACH transfer right over. I can't do that in the test version of the app, or else the app would crash. But down here, you see kind of like all your recent transactions and your estimated earnings. But this is one of the main features that we actually wanted to launch, especially on this call. And I think people are going to like it.
Oh, what was the main feature? I'm sorry.
So the main thing is just using it as an alternative savings app. But the main feature that we're going to launch is this one right here. Pretty basic as well, right? But now you can actually get paid to introduce your friends into DeFi. So with our referral program, let's say you're whoever. You don't even have to really be on the app to get access to the referral program. So for every single person that you sign up, you would get $5. They would also get $5. Money would be deposited into your account and instantly start earning the best rate across DeFi.
All right, so Pat, the real question though is this
Yeah.
$5 in DAI or is it in
Yes,
US dollars?
it is in DAI. It
It
is
is
in
in DAI. Oh, snap.
yeah.
See, I wasn't
Yeah.
sure. I was
No.
coming into that question blind.
Yeah, yeah. So okay, cool. So anytime you see the like dollar sign in here, it is some type of crypto. Like
Okay.
the and it's DAI. It's DAI right now. So basically, anytime through the affiliate, when you're seeing this screen and up here, this $1,207, that's all in DAI. Their earnings, everything's in DAI.
So then, quick question. So when you hit like deposit and that ACH transfer happens, is that like a direct interaction with like somebody on the back end, like Wire, and they convert it directly to DAI? And like, is DAI the only balance that you're seeing on this app? Uh, and is that like, yeah, just can you
Yeah.
expand a little bit more on that?
Sure, absolutely, man. So, okay, yeah. So when we hit deposit, like what's happening in the back? Let's say I want to put $100, right? So I
Hmm.
go here, and then as soon as I hit submit, it takes an ACH transfer from your bank, and then we use Wire to transfer that amount into DAI, and then that amount is then shown in your account right here, and
Got
it's
it.
put into the highest earning DeFi protocol at the time.
And there's no way to just hold like dollars directly on your app, right?
No, not now. We are working on a way to do that, though. Actually, we're working with I don't want to say any names, but like we're trying to partner with certain banks that'll allow
Sure.
us to have like real cash accounts. And then
Understood.
from there, like you can literally get your paycheck, right? Put it in the app and then instantly turn your money on, so to speak, right?
Right.
Plug it in and start earning a better rate.
Right. So
Um,
Outlet is in like this really interesting like class of applications that are meant to bridge DeFi and traditional finance through like this ease of transferring between bank account and crypto, right?
exactly that, right? So like if you take a look at like even the way we manage our money over the past like 20 years has been insanely different, right? So if you take a look like 2003, the best financial advisor was something like Goldman Sachs. You need
Hmm.
5 million bucks. Only in America can use it, um, and they take like 1% of your whole basis, right?
Hmm.
And then 10 years forward, what's the best wealth advisor? It's something like Betterment. Um, they take 0.25 basis points. You only need 5 grand, but again, you can
Right.
only really use it in America. And then 2023 comes around. What's the best financial advisor in the world? It's something around DeFi, right? Like I want it to be Outlet, of course, right?
Uh-huh.
But it's DeFi because anyone has this true universal market access to some really sophisticated financial tools that we can make really simple for people.
Yeah, I
Um,
agree.
yeah,
I'm very curious what's gonna happen around like the rates to go between fiat and DAI, for example, because that rate has been everything from like 0.75% to like I've seen it as high as like even 3 or 4% in some like seasons where it was really high in demand and the market makers didn't have like super large inventories and like really curious to see how that rate evolves over time.
yeah, definitely. I
Yeah.
think that's gonna be really interesting too, actually. And that's a lot of like what's holding back certain apps from reaching mainstream. I feel like, right?
Yeah.
So,
So, so real quick, Pat, there's a question in the chat from Chris
yeah.
Black. Where is the deposited crypto held? Who holds the keys?
Okay, cool. So that's another thing that we want to make a big announcement at during this meeting. Actually, is so what you saw right there, the affiliate program, that is not live in our app right now. That is going to be live in our next update, which should be we're just waiting approval from Apple, so it could be probably within like 24 hours, honestly.
Hmm.
So with that same update is a fully non-custodial version of our app as well. So the keys right now will be stored on your phone.
Hmm.
Um, and we're going to have in a future version a way to basically export them if you wanted to. And like, you could save them wherever you'd want at that point. But yeah, next update, we're going fully non-custodial and you'll be able to like not necessarily see your keys, but they're on your phone. And then the next update after that, we'll be able to like export them and show you if you want and stuff like that.
Right. So, is there like a recovery mode? Like, let's say you can see your keys and you take like
Mhm.
I assume it's just the seed phrase, right? You take your
Yeah,
seed phrase
exactly.
and you write it down on a piece of paper, and let's say you lose the app or you lose access, you're able to like there's a way to recover it through the app itself with those same
Yeah.
keys.
Yeah. So basically, like I said before and earlier on the call, right? Our customers are actually not decentralized focused at all. To be
Right,
honest with you,
right.
they don't even care. Uh, so
What is the usership like in terms of numbers and volume?
okay, cool. So numbers were at about like roughly 100 users that are pretty active with the app.
Yeah,
Right now, we have about like 35K under management or so.
nice.
Um,
How long have you guys been around?
Uh,
Guys the most?
as a company, well, interesting story with Outlet. Actually, we originally built something that was quite frankly the opposite of Outlet. It was a way for you to get a USD loan backed by your Bitcoin,
Hmm.
and yeah, we realized that wasn't probably going to be the killer app, and we want to build that. So we did the opposite, right? Where you can put USD in and back people who are doing those kind of loans, right?
Right.
Um, yeah, we originally got started at the Y Combinator hackathon building that, and we did that for like almost 2 months after that even, and then we suddenly were basically like, this isn't as cool as this other idea we had, and we thought it would be a much better idea and way to bring people into the space. So
So
uh-huh.
so the version of the app that's been out that has about 100 users is like how many months old would you say? Like between 4 and 6? Is that right?
Definitely not even 6.
Not even
Probably
6.
like 4 months. We've been in the App Store for like I don't even know, like a little bit over a month now, probably like a month and like 2 weeks tops or something. But
Nice.
we had like a version on test flight for a few months, even maybe like a month and a half, 2 months on test flight too.
Nice. So then I see on the share screen that there's like a little badge that says funds protected.
Oh yeah, yeah.
So can you tell me about that? Because I understand if it's like if you have custody over like a user's crypto, there might be some sort of thing in the background where you guys insure the funds, yada yada. But what happens to that funds protected badge in the case of your non-custodial version of the app?
Okay, cool. Yeah, that's a good question actually. So it's not going away, which is cool. So we use Nexus Mutual for our insurance provider,
Got it.
and basically, so when we lend against a certain smart contract, right? Like let's just say it's Compound or DYDX, right? Either or. Those are who we work with right now.
Yeah.
So basically, if you have $1,000 in your app, right? We would then in turn buy a policy against the Compound smart contract for $1,000, right?
Hmm.
So therefore, in the act that this Compound smart contract gets hacked or funds are misused, mismanaged in the contract, you are covered.
Right.
So we can't really provide FDIC insurance on crypto necessarily,
Right.
but this is the closest that we can do at this point in time. So yeah, we're about like I said, we're looking to partner with a bank that will actually offer us FDIC insurance on
And
cash.
and so if something were to happen to a user's funds, they'd have to reach out to your company directly, and you guys would have to sort it out, basically.
Well,
Um,
kind of, right? We would
yeah.
have to sort it out with Nexus Mutual, and we would just do it for our customers. Is
Right.
how it would go down with us.
Right.
But yeah, we're covered against every single dollar on the app right now. That is subject to change in the future if we do get like FDIC insurance and we figure something else out. But right now, this is definitely the road we want to be on, and we want to make sure people are safe, right? Like the number one thing we would talk to. Actually, I met you at Meetup, David, originally,
Yeah, that's right.
and like I went to a ton of meetups, right, for non-crypto events and stuff like that too. And the first, I would tell people about this product, and they'd be really excited about it. And the first thing they would always ask me is, "But is it insured?" You know,
Hmm.
so that was something we knew that we had to figure out for our users. And
Right.
Nexus Mutual's there. They're a great solution for anyone. I'd recommend them honestly. Uh,
So, so real quick, Chris Black wrote a couple things in the chat. He wrote, "Can you give more info?" And Chris, by the way, feel free if you have a mic actually to jump on. Uh, I know you're not shy about the mic.
Can you hear me?
Yeah, we can hear you.
Okay, sorry, I'm like in a mall food court. Yeah, I was wondering about like what the non-custodial version is going to look like. Is it going to be like a smart wallet like Argent or Dharma or something different?
Yeah, so it is going to be a smart contract wallet. Right now, like we're working on that, and we're going to be issuing it out in kind of like steps and sequences, right? Like we can't. Rome wasn't built in a day, I would say, and we have a live app right now. You know, it's much different than like Dharma's launch situation where they were able to like pivot and do it that way. We kind of just want to keep rolling out updates, and the non-custodial aspect it is important for us, but you know, again, our target customers don't really care about it. But yeah, to answer that, the first version of the non-custodial version, you won't even be able to really see your keys, to be honest with you. So as a developer, right, you can hide certain data and show certain things. And in the first update, like we just didn't have enough time to really show users that, right, or like think of a way to do it. But basically, it's gonna be here, Chris. Take a look at this. It's gonna be like underneath here. So if you go to other, you can kind of, you know, see what you can do here to kind of verify yourself throughout the KYC process and change things. But underneath here, you'll have something that says something like seed phrase or key phrase or something like that. But right now on this version of the app, the keys are in the app. They're just hidden right now, if that makes any sense, right?
So Pat, really quick then, so is there gonna be like a username password scheme, or like what is the recourse for a person using the non-custodial version of the app that you guys are coming out with?
Yeah.
Like that seems like a like what actually better phrasing of the question is,
Mhm.
what was the logic for initially hiding the keys? Because it doesn't sound like a very like hard thing to do, to put like a
Well,
fake.
yeah, absolutely. No, I agree, man. So the reason why we didn't do it is honestly because we're not focused on decentralized people. To be totally honest with you, like it's not our biggest problem. The thing with it is, right, we want to be able to allow people to export it to like their Google Drive or, you know, even if they want like their iCloud, like do whatever they want with it. And
Yeah,
that functionality is more difficult than you'd probably think. But
right.
just showing like the ability to like on this page, it was like your seed phrase, you know, it is the whatever words underneath. That's easy, but it would confuse so many people, right? Like our users, the vast majority of them are like construction workers. They're like
So like I've been thinking about the topic of like user like education around using crypto, right? And even though people that are non-crypto are like entering into this space where they're using apps that might be interacting with crypto, like do you think that just even having the option there, you know, it doesn't have to be, it's like obviously opt-in, like you don't have to ever interact with your keys if you didn't want to, but
yeah.
having the option there and then maybe having like if you click on it, maybe the first thing that pops up is like, here's more information about what this is, right? Like maybe point somebody to a Chris Black video or something.
Yeah, we could probably do something like that eventually too. You know, like again, it's interesting when you hand someone a piece of paper and see what they draw on it. You know, like that
Yeah.
wasn't in my thought process. Like that's something that we could probably do, and I think that's good feedback.
So
Um, mhm.
yeah. Sorry to interrupt you. No, go ahead.
No, it's cool, man. I was just kind of pressing my phone to make sure it doesn't go black or something.
Right on.
But yeah, I don't think that's out of the realm of possibility either, to be honest with you. But we did submit the update to the App Store, so that would probably be in the next update as well.
Mhm.
But yeah, we're working on some bug fixes right now. You know, different things like just getting this to work was actually the main thing with the
Hey,
stuff in the
Pat,
other.
Right on.
just
So
want to
Chris
chime
is
in
on
on
the
the
mic.
seed phrase issues. I think like you're grappling with something similar to what Argent and Dharma and others like them are grappling with, in that you want to create a user-friendly, simple experience, but you also want it to be DeFi, right?
Mhm.
So, and both of those projects have been working on and developing roadmaps to entirely non-custodial solutions that also give, if there is something that happens to the project or to the app, it still gives the user the ability to access their funds. And it sounds like you're on your way there, but I would definitely encourage you to not look at it as like an unnecessary feature, because it's actually, I think there's really growing consensus in DeFi that having that ability is DeFi. Like that is what
Yeah.
creates the decentralized experience and gives people ownership over their funds at all times. So I look forward to seeing kind of where you guys go with it. Because right now it definitely seems like it's kind of similar to a centralized exchange in a way, the current version, but it seems like you're moving towards that more decentralized experience if I'm doing it right.
Yeah, like it's kind of like I said, right? Like not everyone on this call. I'm actually expecting very few people from this call to be our customer, to be honest with you. You know, it's more or less like we're trying to listen to our actual users, and who they are is basically people that do nothing with their money, right? Like they're people who are who don't invest actively whatsoever. They do nothing with it. They don't know what to do with it. They can't be bothered to look up different strategies. Like these people who are basically from 28 all the way to like 38. Those have been like our main power users. Like they just had a kid, they're saving for some big life event that they might have had, you know, something like they're buying a house, you know, they just had a kid, stuff like that, where they can't really afford this principal risk is what we've defined it as. So in DeFi, it's this like really interesting phenomenon, right? Like it's cool that you're investing and your principal doesn't necessarily go down, right? Like everyone on this call kind of knows that, like, and why. Just, you know, based on like how DeFi kind of works, number only goes up, no doubt.
Haha.
And
Victor must have loved that just now.
it's true, man. That's what a lot of our people, our users, are absolutely loving. Like they're falling in love with that idea and that aspect of decentralized finance. Although we're not the most decentralized tool, we still are like using these open finance tools to provide a better solution to solve traditional finance problems. You know, like we're replacing CDs and bonds in people's financial portfolios all the time, and that's what we're focused on. You know, we're not focused on the decentralized aspect or anything like that. We're focused on return, focused on replacing and solving real issues with traditional investors.
Do you have any like well, actually I have two more questions. So we're gonna kind of like end it maybe in about 10 minutes, but
Okay.
this portion, but I have a couple of questions. So for one, what's in like the distant roadmap? Let's assume that everything on your short list for features is done, complete, launched. What would be like the next steps for the app, and what do you want to what other kind of utility do you want to provide to customers eventually?
Cool, man. So that's a good question. So we have like a lot of interesting ideas right now. Like I could just shout out a couple. I don't want to say anything is a true roadmap right now, because I think first of all, like if you look at like something like Facebook, right? Like they never had a white paper. Like big companies, traditional companies don't have a white paper because they want to be flexible and basically like do anything that they want, right? Do anything that their customers want. So we have a lot of ideas on where we can go next. In the short-term roadmap, we're going to add a bunch of cool charts to the app. We're going to add ways for you to save for different tasks, like your vacation, you know, your new home, your kid's college, etc. Like these big life events that you can't afford to lose your principal.
Yeah.
But long-term roadmap, we're really interested in the idea of sending. We're not interested so much in spending.
Yeah.
Everyone on this app has used it for saving. Like
Right.
spending doesn't necessarily make so much sense to me. But we're interested in the idea of sending, possibly, right? Like something kind of like Venmo, but fully decentralized. Like you don't know who sent you what. Like no one can kind of check out your transactions, and all of a sudden you're earning this crazy interest rate on the back end too. But we're really interested too in like more robo-advisor like features.
Nice.
There's a ton of really cool. So recently, we just got backed by Consensus, and we've been working out of their office lately in New York. It's been really cool.
How many are you, by the way? I don't think I asked.
Oh, it's just me and one other guy right now.
Nice. Very
Yeah.
cool.
Yeah.
Very cool.
Yeah, we've been working with a lot of cool new up and coming DeFi projects and stuff like that in the Consensus office. And there's a couple unique opportunities that are going to be coming to market. Different robo-like advisor features, and one of them is something like DDI. They're
Giving people the option of what to do with their interest.
exactly right. So like like how can you get a better yield than just like, you know, like 4%, or like look at the app right now, basically 2.6%. That's not anything crazy right now, but in the future, you can route your interest to do other things and earn way more. Right now, like the average return, I think Alessio, the CEO, told me was like 16 or 17%. Like that's insane. So different things like that, right? And extrapolating the idea that this is decentralized, this is crypto, or anything like that. Like
So actually, so my like closer to my final question was going to be around how you guys as an app decide where to put people's DAI, right? There's Compound, there's DYDX, there's
yeah,
DSR now, there's there's all of these kind of options.
yeah.
So how do you guys go about doing the risk management for these
Awesome.
customer funds?
So I think that's a really important question. And right, we're a mission-driven company where we want to bring people into the space, and safety is the number one thing, right? Like without safety, we have no brand. I feel like. So with how we define safety is this: we take a look. Smart contract, of course, has to be audited. Like, come on, that's a no-brainer. But two, we have to be able to buy a Nexus Mutual insurance against that smart contract. And three, it has to be like really seasoned. Like there's a reason why we aren't adding like stuff like DDEX or stuff like that just yet. Like it doesn't make sense for us. We want to make sure that they're here to stay as well. And right now, DYDX and Compound really stood out to us as the best solutions when we were making the app. And as we move forward, more things will be added to it, or we might work with other solution providers who basically bundle things in one for us, and kind of use them on the back end. We're not exactly sure if we want to work with them yet or not, because it adds more smart contract risk to the product. But yeah, that's kind of how we think of it, right? Less smart contract risk, more insurance.
Yeah, like I think of apps like Robinhood and like Acorns, where they like their user experience flow, like they're targeting people that also like have zero investment experience, and they just give people the
Yeah,
option like less risky, risky, very risky, at like predictable returns in this range, that range, or that range. And so like I imagine that the apps in the DeFi space are also gonna like tilt towards that kind of general direction, where the service providers are kind of picking out where the yields are coming from and doing the risk assessment and stuff. And I'm always very curious how people approach risk, because in
yeah, sure.
finance, that's like a really, really big cornerstone of like
I
thought.
totally, yeah, I totally agree, man.
Yeah,
So actually, if you take a look at, do you know what Codify is by consensus?
yeah, I've heard of Codify.
Well, what's cool about them is that they actually provide like what they're calling I think it's just called a rating system actually. Like, it's kind of like a number behind how safe they believe a DeFi product is. And if you look at
Yeah, I saw their blog post about that. I see. I love things like that in the space generally. But yeah, yeah, right on.
yeah, no, I think that makes a ton of sense, honestly. And I think a lot of it is sort of obvious to we'll call them like quote unquote experts in the space. People who've just been following around for a long time.
Yeah,
Um, so I think like I think there's going to be a lot more of that, and I think like I don't think there's actually going to be like a universal credit system for this, to be
right.
honest with you. At least not in the next like year or two even.
No,
But yeah, I think that it is that for us, right? It's just like insurance audits. You actually have volume on your platform. And we know it's not disappearing. Like the
it's
founders really
protecting
said.
the users ultimately. It's
Exactly, like
protecting
that.
the users
Yeah,
and providing a product that won't like break down.
exactly. It's a balance of returns and safety for us to be able to add it to our product.
So then my final kind of questions are going to be like around disclosures towards users. So like for
Mhm.
example, when you deposit money, like what is the percentage that Wire is taking on that conversion, things like that.
Awesome.
Uh
That's a good question.
yeah, how do you guys approach those kinds of disclosures?
So, drum roll, please. We pay for everything, man. We pay for everything. We pay for
Oh,
all wire
cool.
transfers. We pay for everything. The only way we do make money is 10% interest on the app, and that's it.
Wait a
So
minute. So a user transfers, they connect their wallet and they transfer
you
100 DAI
can't
over.
connect your wallet right now. You won't be able to connect your
I mean,
wallet.
sorry, your bank account. Yeah.
Yes, yes.
Yeah, so a user connects his bank account, his or her bank account, and they
Mhm.
transfer it over, and it's essentially like one for one, and you guys cover whatever that
Yep. All the DAI slippage, all the fees associated in getting your money into DAI onto our platform is all covered for by us. And when you take your money and withdraw it back to your account, it's all covered by us. And we give you like the whole dollar. You know, we don't do any DAI slippage. Like we give you what you put in the app. And
so is the caveat that you can't send it out of the app at the moment, and that if you withdraw your money, you're withdrawing it to your bank account and going backwards back into fiat? Is that kind of like the constraint on the customer at the moment?
Yeah, exactly. So right now you can't send it outside of the platform, but we plan on enabling sending, like I was saying, at possibly some point in the future. Like we're not super narrow focused down that in our product roadmap. We still want to be extremely flexible, and I think it would be foolish for me to say like, yeah, we're definitely gonna do that. We're definitely gonna do that because we're getting new customers like every single day. We grow at like 2 to 3% a day, and we every single day, you know, there's new customers asking for new things. And so far, basically no one has asked for spending. Few people have asked for spending. You know,
so real quick, in relation to that, so Akiva actually articulated what I was going to say next perfectly. So he asks, so what happens if people just start transferring large amounts of money in and out, making you pay all the fees but never earn revenue because they don't keep it there for long enough?
well, then I think we have a shitty product, to be honest.
But that's a risk, right? That you have to account for. You have to consider
totally.
like the average length of time that your average customer holds,
Exactly.
so average amount of funds, and you guys gotta like kind of price things around there, right? So
Exactly.
you're subsidizing the fees for like wire and stuff in the background is kind of almost like just a user acquisition strategy at the moment.
Yeah, exactly that. Yeah, you could think of it like that. Absolutely. So basically, that's a good point. That's a good comment. So we feel like this, right? If you're not using our app to save long term, it's not good enough. So we need to go back to the drawing board, right? So I totally could just put on like the maximum every single week and withdraw next week for no reason, you know. But that's an issue with us, I think, more than him. I think we should provide a good enough service where it's like, okay, if I leave my money on here for like 10 years, this is amazing. You know, like this is so worth it. And I think that's where we're headed. That's where we're focused on. We're focused on providing people with like upfront value, showing them, hey, like this is so much better than bonds. This is so much better than the CD. You're so flexible as an investor. You know, yeah, like we're having people like that are saying that they're going to use us for like 10, 20, 15 years. Like it's a long-term relationship with a lot of these customers, and we know we're going to be unprofitable like year one, just like banks are.
And it occurs to me actually that it's like a fixable problem too. The thing that Akiva and I were bringing up, it's like you could also just limit customer like deposits and withdrawals in a certain way.
We could, yeah, we could.
You could play around with that in a lot of different ways, right?
Yeah, there's a ton of different stuff we could do.
So I'm gonna open it up to the chat and to the people watching. If you guys have any kind of like final questions, this is the time to ask. We got maybe like a couple more minutes before I launch into the usual recap of the week at MakerDAO.
Hey Pat, good presentation. It's Peter here. I got two questions for you. One is about the insurance. Other one, are you just gonna have this in mobile, or are you gonna also have web-based like Zerion?
So we're focused on like the user experience right now. Originally we were gonna launch a web app, but some bugs on Wire side, so we really can't do it how we originally planned. So what we're gonna do instead is launch a Android app, and that way we kind of like cover most people.
Yeah.
And from there, you know, launch to the rest of the world.
And the second was a Nexus Mutual, the insurance. Is that going to be a pooled insurance, or is it going to be individual insurance just for your side? Because Nexus Mutual is not that big yet, right? They only have about 1.6 mil that cover. So how do your insurance works? Because you know more and more people coming on there. I know you want to get FDIC that covers up to quarter mil. How you want to work that?
Yeah. So what we can do is build custom solutions for clients. So like if someone's on the app and you have like, you know, $5,000 on it, you're covered, man. I would honestly say like it doesn't matter if it's pooled or not. Like all of our funds are insured against. So yeah, it's pooled right now. But if you have a lot of money on the app and you know you're going to put a lot of money on, we can absolutely build like a custom solution for you. And like build literally like a whole web dashboard for you just to log in and stuff like that, which we're probably still going to end up doing. But right now, that's the way it works. Also, because we don't even have a way for you to really upload your own DAI or USDC or like whatever stablecoin you really want. Just because we're more focused on those non-crypto people, right? They don't even know what DAI is, literally. They have no idea what DAI or stablecoin is. Like, I'll explain what Ethereum is and all crypto, and then they'll be like, "But it goes up and down." Like, how does this work? So our users are very non-crypto centric and focused. So yeah, that's kind of why we're doing it this way.
Nice. All right. Well, thank you so much for coming on the call, Pat. This was super interesting. I think anytime we get a chance to take a look at what's going on, what's being built, where things are heading, it's always a great thought exercise. So thanks for coming on and showing us out.
I appreciate having me. Thank you so much for everyone who stopped in. But yeah, you guys should check out the if you guys want to introduce your friends to DeFi or anything like that. Our referral marketing program is pretty sweet. I can't think of another project that really does something like that. So yeah.
All right. Sweet. All right, cool. So for the rest of the call, I'm going to go through some of the stuff that's been going on in the Maker universe. I'm going to post the agenda in the chat. It's a public agenda. You could follow along. I put links to pretty much everything I'm going to talk about. And if you're watching a recording of the call, you could find the agenda in like the YouTube description or in the Reddit thread. There's a few different places that I posted with the recording of this call. So definitely go in there. It's an archive. You could just look up the date and you could see everything. All right. So governance has been exciting at MakerDAO. A lot of interesting things, especially this week, have been coming up. The TLDR, actually, I'm actually trying to try to make this a little bit more digestible, but I didn't manage to write a nice TLDR this week. So I'm just gonna go into like the individual votes and stuff first. So the first thing is last week's executive vote to adjust the debt ceilings, the size stability fee, and the DSR. It was passed. So it was an executive vote that rolled in a few different changes. The DSR went from 2% to 4%. The ETH debt ceiling was raised from 50 million to 75 million. And then in single collateral DAI, the ETH stability fee was lowered from 4% to 3%, and the debt ceiling was reduced from 120 million to 95 million. And so all these things were rolled into a single proposal, which was passed with 48,000 MKR on December 6th. Now, this week, we have a whole new round of votes. The first one has actually been pushed up ahead of schedule. I think it was meant to go out anywhere between the next month to 3 months, but it was in regards to activating the governance security module. And this has become a really big topic of conversation in the last couple of days because of Micah's blog post, which I have linked in the agenda, and we're going to talk a bit about actually later. But it's a yes or no poll. It went up yesterday, but MKR token holders have the option of activating the governance security module. Now, the reason that it was actually set to 0 was intentional. It was communicated on the governance calls. It was posted about in the forums as a part of the overall plan for launch and for migration. But the caveat with the governance security module, which institutes a delay on governance actions, is that if you have a bug in the system and you have a 24-hour delay, then your bug fix is not going to go into effect, but it will be public information for 24 hours. So for 24 hours, that vulnerability will be exposed to the public. And so the thinking for launch was to have it set to 0 for the first month or 2 or 3, depending on what Maker governance decides, to have it at 0, so that if there are any like critical bugs, we would be able to basically get a few Maker token holders together and patch it pretty much without exposing it to the public for too long, right? Like patch it in a single vote with no delay. So I'm just going to quote Rune, what he wrote in the chat about the governance security module for the Maker token holders to consider. But the DAO hack, the old DAO hack, was a real thing. It actually happened, and it was only saved because of the hard fork of the entire blockchain. So technical vulnerabilities are an absolute real risk that can't be avoided. And while crypto economic attacks are theoretical and have never actually been executed, they're still like a real risk in the long run. But the two needs, but the two needs to be properly balanced against each other in the short run. If the governance security module activation passes, the impact of vulnerability would be much more severe, since there would be no way to deploy a swift fix. So it's not black and white. It's a trade-off that needs to be carefully considered, and people should do well to look beyond just taking an alarmist perspective of the situation, because this isn't like something new. The considerations around governance attacks have been something that have been talked about and planned against and considered in our community for years. But certainly, uh, the GSM is important, and learning how to do bug fixes in the Maker protocol is going to be an interesting conversation for the coming future. But yeah, that's just a bit about the GSM poll. So right now, you could vote on the poll, and if it's a yes, then on Friday, it's going to go into an executive vote, and it may or may not pass over the weekend in the executive vote. And the other three governance polls that are going along with that poll are the size stability fee adjustment, the DAI stability fee adjustment, and the DSR adjustment. So the ranges can all be found on the proposal pages. I'm not gonna talk about the ranges too much, because if you are a voter, I just invite you to go to our voting portal and check it out. But all of these governance polls end on December 12th at 5 p.m. UTC, which is Thursday, pretty much right when the governance and risk public call happen. So yeah, four governance polls going on right now, all of which will be rolled into a single executive vote this coming Friday, the 13th. So yeah, fun Friday to have this kind of set of governance votes, right? Friday the 13th. Haha. But anyway, so a summary of Thursday's risk and governance call actually has not been posted yet. It's going to be posted later today or tomorrow. And I encourage you guys to check out the summaries. They're very well done. Uh, they they contain everything the hour and a half to 2 hour long call contains, and you could read through it in about 15 minutes. It's a good way to stay informed if you missed the call, or if you even want a review of the call. Uh, as usual, I also invite you guys to take a look at this thread called Governance at a Glance. It's produced by a community member called named Long for Wisdom, and he does a great job at just keeping all of the most active threads there in one place, so that anybody can kind of jump into MakerDAO governance and see what the current conversations are. All right, so that's just a bit about governance. I'm gonna really quickly check the chat, because I think there's an interesting conversation going on. All right, we'll come back to this conversation at the end of the call if we got a little bit of time. But all right, so for partnerships, integrations, and grants, we got a few things this week. The Blockchain Gaming Alliance (BGA) started accepting DAI for membership purchases. We saw a handful of apps make use of the new DAI tokens permit feature, which actually makes it a lot easier to do ETH-less transactions on the main Ethereum chain. So Ethereum introduced a DAI first experience that allows users to transact with no ETH necessary. Mosendo is introducing the gasless wallet for MCD DAI, and even Degens, which is a betting platform, put out an article for a feature that they're making, betting without ETH, DAI's new permit feature. So a ton of people are hopping onto this user experience kind of like benefit, where users don't really need ETH anymore to transact with DAI, and they're incorporating it, which is really exciting to see, especially three apps this week alone. So we also saw Floatify.net integrating DAI. If you ask me what Floatify.net is, I'd probably say that I don't know, because, to be honest, I forgot. But yeah, anytime I see somebody integrating DAI, I'm happy. So do your own research. Obviously, these aren't endorsements. This is just whatever news I can pick up during the week. But yeah, moving on. We also saw the Coinbase card introduced DAI as the first stablecoin that's going to be on there. I think that card is going to be available in Europe before it's available in the US. But nevertheless, it's really exciting to see the Coinbase card using DAI first instead of something like USDC. It's certainly like just an interesting thing to consider. We also saw Argent, right? Right in line with those other apps that are taking advantage of the permit feature. They're introduced. Oh no, sorry. Argent is not doing that. They might be, but the article I'm referencing is something else. So Argent is introducing a Sai to DAI in one tap functionality in their wallet, which is just making use of the migration contract. So if you have Sai and you use Argent, you can convert it to DAI one for one inside of the app itself. So you don't have to go to our front end. You could use theirs. Yeah, so that's it for partnerships, integrations, and grants. And by the way, feel free to jump in and interrupt me or add or add anybody that you guys think I might have missed from this week. All right, cool. So from the Maker blog, we put out a blog post actually in anticipation of the governance security module conversation and the blog post that Mika put out. But we put out a blog post that this poll would be going up and that we would be voting on the governance security module this week. So yeah, definitely check out that that blog post. And I already talked a bit about.
Hey, David.
Yeah.
Is there concern that, I mean, you mentioned that the governance security module was meant to go up in a month or two or whatever, because that was an adequate testing period to work out bugs. But does putting it up way sooner than that now leave us open to said potential problems, in a 24-hour fixed period? I mean, how is the team assessing that?
Yeah, absolutely. Well, so the idea right now is that because of Mika's article, the knowledge publicly that this kind of attack can be done increases the risk of it actually happening. So because of that added publicity, the way we see it is it's obviously a trade-off. Like, yeah, we think we should handle this now since it's a lot more public, and take the risk that a bug is not going to be found like after the GSM is implemented. But obviously, it's a trade-off. Exactly as everybody's saying, if there's a 24-hour delay on changes we can make to the protocol, that means that if there's a bug, before it can be patched, it's going to be public for 24 hours. So it is definitely an important point of consideration. And actually, I know Wouter's on the call, and he might be able to speak a little bit more, a little bit better to that than I can.
Yeah, I definitely can. It's as David says, so it really is a trade-off, and the situation as we assessed it when MCD was launched is that you have this technical risk in the beginning. So we have a brand new code base, we have a new version of the Oracle infrastructure, we have a tricky economic situation with migration going on from Sai to DAI. And these three things really significantly increase the probability of a technical issue in the first weeks and months that MCD is live. And that's the reason why we put it on at 0 first, so that when we are in this period where there is a higher than usual risk of technical issues and economic issues, that we could immediately put up a vote and then vote that in, indeed, as David was saying, without having to publish the patch, which can be scrutinized, and then from that patch you can see what the vulnerability is, right? Mm-hmm. Now, the other side of the equation is indeed the governance, the risk of a governance attack or an attempted governance attack, and that risk didn't really change with the single collateral DAI to multi collateral DAI switch, so that one was relatively constant. Mm-hmm. But it is a function of how many bad actors are aware of this kind of attack, and also how much polemic there is and appetite to participate in these attacks. Because if we look at it, the attack is quite complex to pull off, and purely from an economic point of view, the way that it was described, to put in 20 million and take out 340 million, I mean, yeah, all respect to the analysts, but that is just in my view, is just a dangerous simplification. There are many more factors to be considered. So you have these. I mean, you have MKR whales who would be in a position where they can pull off such an attack, but they are definitely not incentivized to do so. In fact, they prove it all the time by being active investors in Maker and participating in the governance and so on.
What's funny is that right after the article came out, we saw the current governing proposal for the executive vote. It used to have like on average between 50 and 80,000 MKR sitting in it, but now we see 170,000 MKR sitting in it.
Yeah.
So
yeah, and that's the most positive thing that came
cool.
out of this. Yeah, definitely.
Pretty cool to see. So Lauder, really quick, a qualifying question for you. What
I just wanted to add one last thing. So next to the MKR whales, you have this idea of the dark DAO, and you put up a binding contract and people put in their MKR, and then once it can trigger, it will trigger and execute that attack. While that is a theoretical possibility, it is really complex to pull off from an operational point of view, and it would require time. Even if you don't buy the MKR on the market, but go through O2C channels, then still it would be incredibly complex to pull it off, because you need to remain anonymous. You need to find the right people. So you need to start kind of telegraphing that you're organizing this attack. So it's really quite unlikely that this will happen soon. It's just that giving it the amount of publicity that it was given is it's really it's probably the worst thing you can do, and it really does make a difference in terms of how likely that attack is supposed to be. And what we could see on Twitter, for example, that people start just maybe trolling, but maybe start telegraphing to actually organize this kind of attack, and that's something that we do that we should take into account in our risk analysis.
And that's why the vote was moved up to happen earlier. Yeah, exactly. So
follow-up question.
Yeah, go for it.
I'm sorry.
No, you're good.
Okay, because what I'm hearing from Wouter is that the likelihood of that sort of governance attack, even with the awareness of it out there, is very low, just because of the economical implications and the operational complexity. But that the likelihood of a smart contract vulnerability in the first few months of MCD being live is actually reasonably high, right? So, I mean, that's what I think I heard. So my question is, and with this vote, is there a case where it makes sense to leave the time delay at 0, even though the awareness of the attack is out there, because of what David said before, where, if a vulnerability is uncovered, now we got to wait 24 hours with the vulnerability out in the wild for it to get fixed. Like, is this a real vote? Because the sense I was getting was that it's a given that we want to move this to 24 hours. But now I'm starting to hear a different point of view.
Yeah. So the poll was put up when, for example, the MKR in the system was still much lower, right? So the fact that now the MKR amount in the system, the MKR amount securing the system is much higher, actually does tip the scales a little bit again. And in my mind, this is a real open question. Like, how do we want to weigh these two risks? And it's an assessment that previously has been done mostly by, or at least we have suggested what we thought our assessment was as the foundation in our role of bootstrapping the MCD system. And it's with the discussion that's now going on, this is an assessment that is pushed to the community, which is in itself a good thing. That should be the case. But for me, it is really, it's really, I'm on the fence. Like, I would probably, from my role as a technical, just as people who implement the system, I would probably be more comfortable if we would take a little bit more time to put the instant access modules in place that would, to some extent, ameliorate the the delay that you're putting in place in cases where you don't want to have a delay.
Right.
And then once you have that in place, it's kind of the best of both worlds, which was the original plan.
Yes.
The question is, if, let's say, if there is now a reaction against us postponing this delay, and people start, organizing attacks again, well, they will force us again to, to then speed it up again. So I don't know. It's very hard.
At the same time, there's some context that should be painted as well, right? Like, we have one of the strongest code security roadmaps in the space. We've gone above and beyond in terms of how much we've audited the code, how much your team Wouter has done work in the area of formal verification. So although the risk of finding a vulnerability now is obviously still there, it's very real. Like, anybody that's worked with code knows bugs can be found kind of with no forewarning and with plenty of audits behind that whole code base. Like I said, it's a really hard trade-off to measure. That's the problem. Yeah.
Yes, and one element that we also need to take into account is the alternative. Then what happens when there is a vulnerability that is found? Well, the alternative will be emergency shutdown, right? So one way to look at it is to say, okay, given the circumstances, with the increased risk of a governance attack, yes, we do put the delay in place, but we do know that the result is that we might need to trigger emergency shutdown should a technical vulnerability pop up soon. Whereas ideally we would have been able to patch it should the delay, should we have been able to postpone the delay a little bit further. Right. So I think that's kind of the way that I look at it.
Right. So at the moment, if a bug were to be found, Wouter, what do you expect to be the process after the delay, after the governance delay exists, right? And before the instant access modules, what would have to happen?
Yeah, well, first I want to say that if we do put the delay in place on Friday, then my next priority definitely would be to have it followed up quite soon with the instant access modules as soon as we can do it safely from a technical point of view.
So where are those at in terms of development?
Yeah, I'm not going to make any promises right here on this call, but after this call, I have a planning call with the smart contracts team, and that's exactly what I hope to learn there. That it might be information that might be very important actually to decide how to vote in this poll. So I'll have a listen with the team, make sure that we have some reasonable estimates. At least I hope we can arrive at that, and then that will be important information to base your decision on.
That's really good to know. Thanks so much, Wouter. All right, so we're at the top of the hour. So I'm gonna skip over a ton of stuff in my agenda. If you guys want, you can still check it out. There's links in there in the agenda doc itself. But maybe just a couple big pieces of news was that we saw the DAI supply surpassed the Psi supply. So it's official. The flippening between MCD and SCD has happened. And we saw it also with the amount of ETH locked. We saw DAI and DSR surpassed 10 million for the first time this week. So we're hitting a bunch of these really early milestones, which is exciting. And so, yeah, there's a handful of videos that came out. I highly encourage, if you're an MKR token holder, to watch Primosh's presentation on monetary policy in MCD and how Maker token holders manage it. It's in episode 63 of the governance risk meeting. And actually, I just want to paste the link to it here because it's a really interesting presentation. And I think it's very valuable to you if you're an MKR voter. So yeah, without further ado, thank you guys so much for coming on the call, and we will see you next Tuesday.
Thanks for having me, David.
Cheers, Pat.
Take care, guys.
Take care. Take care.
Good job, David.
Likewise, nice seeing you, Pete. Take care, guys.
Thank guys, very helpful, very interesting. Thank you.
Bye.